Okay, so good morning again, everyone. This is Barry Cohn at Really Great Employee Benefits for our monthly webinar. This month, we're talking about COBRA because over the years we've had so many horror stories with companies that haven't handled COBRA correctly. And in fact, just in the last couple weeks, we've had a couple questions that popped up with some of our clients. So I think this might be timely. There's some common mistakes people make. I'm going to talk about COBRA on an extensive level. But first, as always, we're having our disclaimer, which is this content is provided solely for informational purposes. The information should not be relied upon as a substitute for legal, accounting, tax, or professional advice. On the other hand, so you know, I received source material for this from the Employee Benefit Security Administration, the Department of Labor, Society of Human Resource Management, and Think HR. The EBSA has a booklet for employers on COBRA, and I looked at the latest booklet to make sure that nothing was changed that we should be aware of, and we're all good to go. So our agenda today is talking about what COBRA is and what Cal-COBRA is, and how you know what the difference is. Also, COBRA qualifying events, COBRA notices, which are often done incorrectly by employers, election procedures, which is the timeline for when an employee has to elect and make decisions and pay, which is different if you're using a COBRA administrator or if you're doing it yourself. Talking about benefits under COBRA, duration of COBRA, which is also misunderstood by a lot of people, and COBRA penalties, and then common COBRA mistakes. We'll be talking about probably some of the mistakes as we go along, but I wanted to have a summary of those also. So let's start out with what is COBRA? COBRA requires that group health plans offer continuation coverage to covered employees, former spouses, and dependent children who otherwise would have lost their coverage due to specific events we'll talk about in a minute. And it may require individuals to pay for COBRA coverage. So this says that an employer could actually pay for it, although that's very, very rare. And we're going to talk about some instances where people want to keep people on the plan rather than pay for COBRA. And employers may charge a 2% admin fee for COBRA, which is different than Cal-COBRA, which is a 10% admin fee. Cal-COBRA is for companies under 20 employees in California. And in this case, the carriers administrate the COBRA plan, the Cal-COBRA plans. And so the employers must notify carriers within 30 days that there's a COBRA qualifying event. Carriers can charge 10% above the premium. And the important thing here is that, and we get calls all the time from companies under 20 that say, hey, I have an employee left, what do I do about COBRA? And we always tell them, hey, the carriers will handle COBRA, whether it's Anthem Blue Cross or Blue Shield or HealthNet or Kaiser or what have you, they're going to handle the COBRA under 20 employees. One of the big issues with companies are when they cross over that 20 employee threshold, which we'll talk about in a couple minutes. There's also a California extension of regular COBRA coverage. So regular COBRA, for the most part, is 18 months. But after the 18 months, you can get offered Cal-COBRA for another 18 months. So you can have 36 months. And that was put together when the ACA was passed, the Affordable Care Act. So let's talk about what plans are subject to COBRA. All privately held companies would have at least 20 employees on more than 50% of its typical business days in a previous calendar year. So you look at the previous calendar year and you look at how many employees did you have on average for over 50% of the time. Full-time and part-time employees are counted, and the part-time employees are counted as a fraction. And as people know that have been on other webinars with us, that the counting of employees, especially part-time employees, is different for everything. Whether it's the Affordable Care Act, and whether you're an applicable large employer over 50 FTEs, or it's pregnancy disability leave, or FMLA leave, or in this case COBRA, how you count part-time employees are always different. So with COBRA, it is set up as you have to count part-time employees on the hours they work divided by the hours an employee works that's considered full-time. Now, full-time, that's an interesting question because under the Affordable Care Act, 30 hours or more is considered a full-time employee. And some employee handbooks say that you're a full-time employee if you work 40 hours or more, 40 hours a week, and you're a part-time employee if you work less than 40 hours a week, which is different than what is eligible for benefits. So our recommendation is 30 hours a week you're eligible for benefits, and you should use that 30-hour mark. And then the issue with carriers when it comes to Cal-COBRA and COBRA, when you cross over the 20, is that carriers only look at how many people are enrolled on the plan. So if you have 25 people, but only 18 enroll on your plan, the carriers may categorize you as Cal-COBRA when you shouldn't be Cal-COBRA. And that becomes an issue, and I'll explain why in a big moment. What is covered under the group health plan under COBRA, and this is another place that people get confused. It's the health plan, prescription drugs, dental, vision, employee assistant plans, and flexible spending accounts. Where we say issues all the time is that they offer COBRA on the medical side, but they don't offer on dental and vision. And if they have an EAP, they don't think about it because life insurance and disability insurance are not covered by COBRA. And usually, EAPs are basically combined with life and disability. Some companies have separate EAPs. We have a client with 80 people in the Simi Valley, and they have a separate EAP program or plan with an EAP provider, even though they have life and disability with a carrier. So the issues are that all of these things will be eligible for COBRA, and we'll talk about how that works. The reason I have prescription drugs separate is that if you're a large company and you self-insure and you have 100 or over, you may have a separate prescription plan and a separate medical plan, which is why they're both listed. Who's entitled to COBRA? Qualified beneficiaries would be employees that have a qualifying event. We'll talk about qualifying events, but they're basically terminations for the most part. But employee's spouse or former spouse, dependent children, and children born or adopted by a covered employee during COBRA. So if you're in your COBRA and you've taken COBRA, and all of a sudden you have a child or you adopt a child, then that person is entitled to COBRA also under the federal and state laws. Be careful. This is one of the big horror stories we see. Some employers ask us, is it okay to keep them on our group plan for 30 or 60 or 90 days? We're going to have a severance agreement. We're terminating them, or they're leaving the company, and we told them we're going to pay for their health insurance for 3 months or 6 months or whatever. And what best practice, and we say, is terminate them from the health plan, offer to pay for their COBRA for that period of time. But here's the danger. If an employer pays for their COBRA and then they stop paying for it, if the employee decides, COBRA's too expensive, I don't want to take it, they may not be able to buy individual coverage until January 1st of the next year under the Affordable Care Act. So it's something to be very aware of, that if you pay for COBRA, you have to let the employee know that, hey, if you don't continue the COBRA, it may be an issue, because the qualifying event was you terminated from the company, which happened 60 or 90 days ago, but you can only buy individual coverage in California and in most states within 30 days of a qualifying event, and having your employer stop paying for COBRA is not a qualifying event. Also, I should state that the reason we don't suggest employers pay and keep them on the health plan is that it sets a precedent for other employees. So employees know that their health coverage terminates when they leave a company for whatever reason. But if you take one particular employee and you single them out, you're giving them a different benefit, and that could be a problem in the future, especially if you end up with a lawsuit regarding termination and health benefits. So here are the qualifying events for COBRA. You terminate an employee for any reason other than gross misconduct. The question is, what is gross misconduct, and how do you know, not pay for COBRA, or not offer them COBRA, not offer them COBRA. And I would suggest that if you terminate an employee for gross misconduct, before you don't offer them COBRA, you should speak with your employment attorney. The employment attorneys we've spoken to and that we refer our clients to have said, hey, it doesn't cost you any money to offer them COBRA, because if you say we're not going to offer you COBRA because of gross misconduct, they may end up suing you. So termination or reduction in employees' hours. So if somebody's eligible for health benefits and they worked over 30 hours a week, and then the next year, either they work, they're not working 30 hours a week, or you have a reduction in hours because of business purposes or because they've asked to have a reduction in hours, that may be a qualifying event under COBRA. So here's an example of that happening. We have a client which has about 80 people in Santa Monica in New York. And they, when they hire a new employee, they don't know if they're going to work 30 hours or more a week because of the type of business they are. So they fall under the Affordable Care Act variable hour rules. So there's a measurement period for 6 months where they measure how many hours somebody works. And then after the measurement period, if they average 30 hours or more, then they offer them benefits. If they go on benefits, they still have to measure them for the next 6 months. And if in the next 6 months they don't average 30 hours or more, then they have to terminate them from the plan, and then they have to be offered COBRA. So that would be a reduction in hours because they're working less than 30 hours. The qualifying events for spouse and dependent child of a covered employee are the following. A termination of employee's employment, obviously the same. If an employee gets terminated, then their spouse and dependent children are offered COBRA. A reduction in hours would also affect that. But here are some items, 4 items that aren't affected. One would be if the employee becomes eligible for Medicare. So let's say they're still working for the company, but they're 65. They decide to take Medicare and go off the group health plan. That would be a qualifying event. Divorce or legal separation is also a covered event under COBRA. And I'll tell you a quick story that 20 plus years ago in 1997, when I left the bank after 20 years, I had an ex-wife and she was on the plan. And when I left that bank, now, number one, when we got divorced, she had to have been offered COBRA, and the bank didn't offer her COBRA, and there's 150 employees. And she got a lawyer and said, hey, I was supposed to have COBRA. I want you to pay for my benefits and my medical expenses for that time period. You didn't offer me the COBRA. I would have taken it. And it became a mess, and the bank decided to pay all her medical bills. The other problem is, with ex-spouses also, is that they're entitled to COBRA for a certain number of months, but if the employer changes health plans and goes from Anthem Blue Cross to Blue Shield or Blue Shield United Healthcare, you have to offer all the COBRA participants coverage, which is one of the big mistakes we see. And that also goes for ex-spouses. The other thing is a death of a covered employee. If an employee dies, then their spouse, partner, and or children would also be offered COBRA. And then loss of dependent child status. So if a child ages out at 26, when you become 26, you can't be on your parent's plan, then that would be a COBRA qualifying event. And then the employee's children have a choice. They can go on COBRA, or they can buy an individual plan. That's really what the choices are at that point in time. So those are the qualifying events. There's also a second qualifying event, and this is a little bit complicated, and people kind of forget how that works. You can have an 18-month extension, may be available, for a total of 36 months of COBRA, if during your COBRA period, any of these three things happen. So in this instance, and it will be a chart about how long COBRA is, if you get qualified for COBRA because the employee terminated, you get 18 months of COBRA. And then during that 18 months, if the covered employee dies, or there's a divorce or legal separation during that first 18 months, or the covered employee becomes eligible for Medicare and is entitled to it, then that's a second qualifying event and you could get 36 months. A second event is only available if the second event would have caused a loss of coverage and a COBRA qualifying event in the first place. So the first qualifying event would be they terminated from the company. The second qualifying event would be they died, there was a divorce, or the covered employee becomes eligible for Medicare, and then immediately that provides a second qualifying event. So these are the notices that you have to provide to COBRA participants. And this is something that if you have over 20 employees, you have to be concerned about. The first is the general rights notice, which also used to be called the initial rights notice. I always get them mixed up, but I think general rights notice is the new term. When someone joins your health plan, within 30 days, you have to make sure they get a general rights notice. This is a notice that basically says, hey, you're on the health plan. If you ever leave our company, you're entitled to COBRA, and these are your general rights. So here's the issue. Later on, we'll talk about how to manage COBRA or administer it, but if you have a third party administering your COBRA, so you've decided, God, this is too complicated, we're going to use a third party, such as Infinisource or PrimePay or Discovery Benefits as an example of some companies that have COBRA, you have to make sure that when you buy the COBRA coverage that you make sure that you're paying for the general rights notice. And you have to let the COBRA administrator know every time somebody joins your plan. This is the biggest mistake people have. They don't give out the general rights notice. The second big issue is that when you join a plan, whether it's a current employee or a COBRA employee, you're supposed to give them a summary plan description within a certain number of days. 95% of companies that we see do not provide summary plan descriptions. And when the Department of Labor comes in to do an audit, or the IRS comes in and does an audit, whether it's an ERISA audit by the Department of Labor, an ACA audit under the IRS, the first thing they're going to say is, show us your notices and show us your summary plan description. And we have letters from the Department of Labor that are redacted with the name of the company that shows that the first thing they ask for is your summary plan description. And most companies don't have that. So that's the second notice. When someone leaves the company, they get a COBRA qualifying notice and an election notice. Sometimes they're combined in one notice, but you're saying to an employee, you've been terminated from the company plan either because you resigned or you were fired or you have a reduction of hours, and now you qualify for COBRA. And so these are the number of days you have, and these are your choices. And then they give you an election notice that you sign, I want COBRA, I don't want COBRA. There's a couple other cases where there's a notice of unavailability of COBRA after they already have it, which is a little more complicated, and a notice of early termination. And those notices people have to give out. I'm not going to get really into those right now, but the general problems people have are COBRA general rights notices, summary plan descriptions, and then getting the COBRA qualifying notice out in time. I will tell you that one of the big problems we've had with a couple clients are if somebody goes out on medical leave and the company's handbook says they have a certain amount of time for medical leave, and then at the end of that medical leave they don't return to the company, and therefore they're terminated, and then they're entitled to COBRA, and we see mistakes all the time when that happens. So COBRA election procedures. And a former employee has, or former employee's spouse or dependents have, 60 days to elect or decline COBRA. It's the later of the date the election notice is provided or the date the qualified beneficiary would otherwise lose coverage. And each person has an independent right to elect coverage. So if you have an employee and their spouse is on the plan, that's two separate election notices and two separate COBRA packages. And if there's a family on the plan or employee and children, each person has to elect COBRA. Now, obviously, if the children are under 18 and aren't able to have age of consent, then the parent has to do it. But basically, they get three different options. So an employee can say, I'm not going to take COBRA, but my spouse and children are, or my children are going to take COBRA, but I'm going to buy an individual policy, or what have you. So that's important. If they decline coverage during the election period, the first 60 days, they have the ability to change their mind before the 60-day period is out. And that's come up once or twice with a client of ours who's headquartered in Studio City. We've had that issue recently. And then the other thing is that the COBRA beneficiaries, the COBRA qualifiers that elect coverage, once they elect coverage, they have another 45 days to pay the premium. Now, let's assume for the moment that somebody leaves the company on June 30th. So they have to elect coverage by August 30th, which is 60 days. It might be August 29th. I have to add up 31 days in July, but let's say August 30th. So they elect coverage 60 days later. Then they have 45 days to pay, which is all of September and half of October. Now, when they pay, they could pay on the last day, but they have to pay for July, August, and September all at once, all 3 months, and that's required. A lot of people will leave a company and say, I'm not sure I want to take COBRA or not, and sometimes, I have a new job, but I don't get benefits for another 60 days. What should I do? Should I buy COBRA? And what we tell employees are, elect COBRA, but don't pay for it until you have to. And if for some reason during that 60-day period before you get benefits, or 75-day period, whatever that number is, that you either pay for it because you had medical treatment or you don't, but that's a way to protect yourself as an employee who left the company. So here's the COBRA timeline. Now there's two COBRA timelines. One is if the employer administers COBRA, and the second one is if you outsource it to a third party. Now, if the employer administers COBRA, then you have to send out a COBRA initial rights notice within 30 days, which is best practice, is 14 days to 30 days. You terminate the employee. I'm sorry, I did that backwards. Let me start all over again. When you hire a new employee and they go on your plan, you have to provide them that within 30 days of joining the plan. Now, once you terminate them, the clock starts. You have to deliver the qualifying and election notice within 14 days after the end of coverage. So if they left the company on June 30th, you'd have to give them the notice by July 13th or 14th, whatever's 14 days. Then they have 60 days to elect it, and then they have 45 days to pay for it. Okay, so but it starts when you terminate the employment, 14 days, 60, 45. On the other hand, if you outsource it to a third party, again, initial rights notice within 30 days. Now, if you terminate them, you have to notify the TPA within 30 days. Okay, so I'm just going to point this out to you right here, that you have to notify the TPA in 30 days. And then the TPA has to deliver the election notice 14 days later, within 14 days. And then they have another 60 days to elect it, and then pay the premium in 45 days. Now, if you notify the TPA or your third-party administrator, on the first day they left you or the 15th day you left you, obviously the time frame changes based on when you notify the TPA, because once the TPA is notified, then they have to deliver the notice within 14 days. So at worst case, if a company goes, oh, I forgot to notify my third-party administrator, and on July 29th they notify them, then by August 14th or 13th, the TPA has to deliver the election notice, and then that clock starts. Okay? By the way, if you have any questions, I didn't mention this, but if you have any questions, put it in the chat box. The chat box is there, should be there, on the bottom right, I believe. And then I'll see those questions. We'll get those answered. I forgot to mention that, and I apologize. So benefits under COBRA, again, they have to be identical to the coverage offered to employees in the same class of employees. And why I say that is, let's say for a moment that you have HMOs and PPOs, and I'll give an example. We have a company that has 2 HMOs and 2 PPOs. They have 60 people. They're located in Oxnard, and they offer their employees, they pay for 90% of a HMO plan, and the employees have the option of choosing a different HMO or 2 PPOs. When they get offered COBRA on a COBRA qualifying event, they stay on the same plan they have until the next open enrollment. But once they go to open enrollment the next year, or whenever open enrollment is, the same benefits and choices that are offered to current employees are offered to COBRA participants. So let me give you an example. Let's assume that the employee leaves on June 30th, and they're eligible for COBRA, and they elect it and they pay for it, and so their COBRA coverage starts July 1. But in January 1st is open enrollments in December, and January 1st is the new plan year. In December, they have to offer all the COBRA participants the same benefit choices and same options that all employees get. Medical, dental, vision, EAP, they have to offer that. So what we see a lot when employers offer just, let me rephrase that, when employers do their COBRA themselves, and sometimes with an administrator, but most of the time it's by themselves, that they say, oh, it's open enrollment time, you can renew your plan for another 12 months, here are the new rates, but they don't offer them the other plans. And that is against the law, and it will get them in trouble, or get an employer in trouble. Flexible spending accounts are kind of complicated. And so I'm going to speak to it this way. Let me take a sip of water first. If an employee is in a flexible spending account and have put money away, once they leave the company, they are entitled to use the money up they've already put away. And if they decide to, for this plan year, they could continue to contribute money into their flexible spending account. This is kind of a complicated issue. And I would just say that because there are no longer payroll deductions going into the flexible spending account, the employer would have to collect it and have to make sure it's collected and all that. It's kind of complicated, and most of the time what we see is people use up their money and that's it. So here's the duration of COBRA. As I mentioned before, it's 18 months for an employee, spouse, or dependent child. If you're eligible for COBRA, you get 18 months. And then with the ACA extension, you get another 18 months, with Cal-COBRA. But let's assume that the spouse or dependent child is eligible because the employee becomes Medicare eligible. They get 36 months. If it's because of divorce or legal separation, they get 36 months. If it's because of a death of an employee, they get 36 months. Or loss of coverage due to the aging out would be 36 months. So let me give you some examples. You work for a company ABC, and you have your whole family on the plan, and you become eligible for Medicare. You can stay on the group plan if you want, but usually you don't. You go on Medicare. When you go on Medicare, your spouse and dependent are eligible for COBRA because it's a qualifying event, but they get up to 36 months. The same issue if you work for a company and you have a divorce or legal separation while you're working for them, they're entitled to COBRA for 36 months. If you're working for a company and you pass away and you die, your spouse and dependent child are eligible for COBRA for 36 months. Again, I say spouse, but it's also spouse and partners. A lot of companies let domestic partners either same sex or opposite sex, and so that would be a COBRA qualifying event. Loss of COBRA coverage due to age would be a child who turns 26. One of our children recently turned 26, and she's no longer on our group plan, really great employee benefits. So she was offered COBRA by the carrier. And then the question was, should she buy COBRA or buy an individual policy? She ended up taking an individual policy. But if she took COBRA, she'd have 36 months. Termination. There's a little footnote down there. After 18 months, you get another 18 months under Cal-COBRA that we already talked about. But if during the time you're on COBRA, you become disabled, your COBRA can be extended for another 11 months, then that would give you 29 months. Or if during the time you're on COBRA, so let's assume for the moment that your employee terminated and they get 18 months, and then there's a second qualifying event, Medicare, divorce, death in the middle of the first qualifying event, then you'll get another 18 months to 36 months. Obviously, it's pretty complicated, and we don't recommend that employers do it themselves. Um, there's ways of doing it yourself, but we'll talk about that in a little while. But early termination of COBRA, the question becomes, when can I terminate them if they haven't paid the bill? So, as you already know, during COBRA, the former employee, spouse, partner, dependent have to pay their own premiums, and they have to send it to either the third-party administrator or the employer. What if they don't pay timely? Well, you should provide a 30-day grace period, but if they're late, you can terminate them for lack of payment. The other thing is the employer ceases to maintain any group health plan. So this happens a lot, and it happens a lot when there's acquisitions. When there's an acquisition of a company, most acquisitions, the company buys the assets of the company they want to buy. They don't buy the stock. And so once they buy the company assets, the former company's plan is eliminated. And I'll give you an example. We had a company that was a moving and storage company. They had 25 employees. She decided to sell the company, never thought about her employees. She sold the assets, and the day before she sold the company, she said, "What happens to my employees?" And we said, "Well, they're not eligible for COBRA because you're selling the company and your plan will stop. It's a qualifying event. They're able to buy individual coverage." But all of a sudden, she had 24 employees that were losing coverage like within one day, and she never thought about it. A qualified beneficiary begins coverage under another group plan. So a lot of times people take COBRA, or they're eligible for COBRA because they've left a company and they haven't found a new job yet, or they found a new job, they have their waiting period before they get eligible for benefits. But once a qualified beneficiary begins coverage under another group plan, COBRA ends. And we've had this question asked before, where someone says, "I have an employee that left us, now they're working for XYZ company, but they want to stay on our COBRA." And the question is, well, are they eligible for benefits at the other company? And if they are, they have to elect it, and then you can take them off as a COBRA participant. A qualified beneficiary becomes entitled to Medicare. That would be an early termination of COBRA. And a qualified beneficiary engaged in conduct that would justify a regular plan terminating a regular employee, such as fraud. But usually that will be fraud or theft. But if you have a beneficiary who's on COBRA and you find out they've committed fraud for some reason with the employer, that would be an early termination. And that's where you get that early termination notice that you were terminating early because of one of these events. So the next question is, who administers COBRA? I already stated that Cal-COBRA, the carriers do it, if you have less than 20 employees. But if you have 20 or more employees, then it's federal COBRA. And the company that has federal COBRA can handle it one of three ways. And I will tell you that I recommend not doing it yourself. I see too many mistakes, too many issues. We get phone calls, kind of every other week from one of our 350 plus clients that says, "Hey, I have an employee that left us and I got to do their COBRA. What do I do, or how do I do it, or whatever?" And we're not qualified or bonded. Let me say qualified is not the right term. We're not bonded under our E&O insurance to offer COBRA advice. And we say, you have to take care of it. But you can do it by paper. I mean, you could go to the Department of Labor website and the federal websites and get all your COBRA documents and do it yourself. But then you have to remember to watch the dates, make sure you don't miss something, make sure you get updated. It's complicated. The other thing is buying a COBRA software. There are some companies out there called, so one was COBRA on Q, COBRA Guard, where you can buy a software and use that software to administer COBRA. But again, you have somebody in your company that has to do the work. And the issue is that most companies, and I'll just give you a great example. We have a company we're going to at 12 noon today that's got 25 to 30 people. Their office administrator, executive assistant to the manager of the company is stuck with payroll, HR, office administration, and a whole bunch of things. And I could just tell you, since we've already done an HR assessment, but they're in non-compliance of a whole bunch of things regarding HR notices and regarding the Affordable Care Act. Putting COBRA on top of that, it's just too much work. We have another company with about 35 people, but a year ago we took over. They outsourced their COBRA, but they keep forgetting to notify the third party that they had someone terminate. So we end up having to do that now for them. So you can use software, but that presupposes that every single day you open the software and you check to see if you have to do anything. Send out an initial notice, send out a qualifying notice, send out a billing notice because they haven't paid or what have you. So our recommendation is always to hire a third-party administrator. Some third-party administrators are Prime Pay, Infinisource, Discovery Benefits, but there are thousands of them out there. And the price of a COBRA outsourcing your COBRA administration is fairly reasonable. Actually, it's extremely reasonable. It's usually under $1 an employee per month. So let's say you have 50 employees and you have 40 that are on the health plan. So 40 are on the health plan. You would be charged $40 a month, every month, for COBRA administration. You have to make sure they're sending out the initial notices, and there's a couple other things like at open enrollment, you have to make sure they send out the new open enrollment packages to the new employee, the employees that are already on COBRA. So there's some little ups and downs on pricing, but it's kind of cheap insurance. I'm going to have outsourced to a third party. I'm paying $50, $75 a month. Depending on how many employees you have. If you have 100 employees, it might be over $100 a month. But you can rest assured that they're going to do it right. All you have to do is when you terminate somebody, and you terminate them from the health plan, you send an email or you fill out the form, or you go online and you terminate them from the health plan with the COBRA company. And then it's all taken care of for you. You don't have to worry about it. You don't have to worry about dates. You don't have to worry about anything, missing stuff. They're going to do it for you and inform you. COBRA penalties. So let's say you decide to do it yourself. Or let's say you outsource it, but something happens and there's a mistake made. These are the kind of penalties you could have. The greater of $2,500 or $100 per day for each beneficiary affected by COBRA during the period of non-compliance. So let's say you have 4 beneficiaries. It's a family of 4. They've left the company. You forgot to give them their COBRA notices. And finally, at 60 days, you go, oh, God, we forgot to give them their COBRA qualifying notice and all that. You could be fined $24,000 for that. IRS penalties are up to $15,000 if it's a minimal issue. That's on top of the $24,000. And then under ERISA, there could be statutory penalties of $110 per employee per day. So $110 per employee per day. Let's assume that you're supposed to give out a COBRA qualifying notice within 14 days and you forget to do that. That's over $1,500. And if it's a family of 4, you're talking about over $6,000. You can also get civil lawsuits with attorney's fees and interest. So you want to make sure you're following the rules of COBRA. And you want to make sure that you don't make mistakes, which is why we recommend that you outsource it. Okay? I'm not telling you to outsource it because we're going to recommend a carrier, a third-party administrator, and then we get a fee for it. That's not really what it's about, and nor do we get fees from third-party administrators. But it's important to make sure you're doing it right. And by doing it right, you want to make sure you don't have penalties like this. And we see it more than once. More than one occasion. I'll give you another example. We had a company for 10 years until there was a change of ownership that had about 120 people in 6 states, and they were trying to do COBRA themselves. And they had they were with Blue Cross of California, and then one year we changed them to a different carrier. They moved to Blue Shield, and the HR person did not let everybody on COBRA know they had this open enrollment. They forgot to tell them. The people lost their coverage. They called the company up and said, hey, we just got a notice from Blue Cross saying we've lost our coverage. We're on COBRA. What happened? And they called us and said, what do we do? And the first question was, will the new carrier, Blue Shield, let them go on the plan because they forgot to do it at open enrollment? And the answer was they wouldn't do it. And Renee, who founded our company and is my spouse, said to the head of CFO of the company, I think you better pay for their medical expenses because until the first of the year when they get qualified for individual coverage, because you guys blow it. And it's something that shouldn't have happened, but they wanted to save money and not outsource it to a third party. And so that's a great example of where you run into problems. Common mistakes. So let's talk about who to count. We already talked about that in an early slide. You count all full-time and part-time employees that worked for you during the last 12 months, where 50% of a typical business days in a previous calendar year, you had over 20. So here's the issue. You have to count full-time and part-time, and I told you what that fraction was in an earlier slide. But the issue becomes, and we see this a lot, when a company crosses the threshold to 21, 22, 25, what the carriers do, okay? So the carrier, if it's Cal-COBRA, the carrier may say, oh, you now have 24 people enrolled and you don't qualify for Cal-COBRA any longer. We want you to go, you have to be on COBRA. To which you have to let them know that, during 50% of the previous year, you weren't over 20. But usually what happens is the first of the year, you have to notify the carriers, and the carriers notify you that you have to sign an affidavit that we're over or under 20. So that's one thing right there. The other issue is what I mentioned before, is where you have 30 people in the company, but you only have 15 or 16 or 18 on the plan, and the carrier believes you're Cal-COBRA when you're really COBRA. And here's where that issue comes in. If you are Cal-COBRA, Medicare pays, I'm sorry, I said Medicare. If you're Cal-COBRA, the carrier, will end up covering the benefits. But the bottom line becomes is you have to make sure that you're notifying your carriers what your numbers are every year to make sure that you don't have that issue. And sometimes you have that issue, and you especially have that issue with Medicare people, but you have that issue with COBRA. So every year, beginning of the year, you should be looking at your number of people and make sure you're still over 20, unless you're contracting and you're under 20. Not understanding who's eligible for COBRA, that happens all the time. I mentioned the bank I worked at for 20 years, and when I got divorced, they just completely forgot I had a spouse for 14 years. They didn't offer her COBRA, and it got messy. The next item is not sending appropriate notices at the right time. The most important one is the general notice. As soon as somebody joins your health plan, you have to give them a general notice, and you have to give them a summary plan description, and those are the things that people miss. Only offering medical coverage and not offering dental, vision, or an EAP. Forgetting about COBRA participants in open enrollment, we covered that. And canceling COBRA due to a cancellation of a health plan. And we see this once in a while. Whenever a client of ours is on over 20 people, because if you're under 20, you have to, well, either under 20 or over 20, doesn't matter. But if you're going to change carriers, so it's open renewal time, open enrollment time, you're changing carriers, you're leaving Blue Cross, you're going to United Healthcare. You have to make sure that anyone on COBRA is given the new enrollment packages, because if you cancel your current coverage with Blue Cross, that becomes a problem. So these are the most common issues. So if you're using an outside COBRA administrator, every year they'll send you a notice that says, it's open enrollment time in 90 days, what are your plans and what are your rates? We have to let the COBRA participants know. We just received 3 COBRA renewals from a third-party administrator. It went to our clients and it went to us, and it's that little sheet that says, we need to get an updated list of who's qualified under COBRA, and what plans you have and what your rates are, and make sure you're doing it right. So the COBRA administrators help you by making sure that you do that, but sometimes you forget to do it. It's not the number A priority on your desk, and then you have an issue there. So I think that's all I wanted to cover today. My question is, well, obviously we're a good resource for compliance information as always. whether it's Affordable Care Act, ERISA, HIPAA compliance, city, county, state, federal laws. If anyone has a question, please feel free to type it in the chat box and I'll answer it. And while I'm waiting to see if there's any questions, I would like to say that next month we're going to be having a webinar on work comp fraud and work comp best practices for employers and what employers do wrong with regards to work comp. One of the biggest ones we see, and I'm sure this will be brought up, is that you have somebody on work comp and they're not working for you any longer, and you keep them on the health plan when a regular person, if they terminated from the company, they wouldn't be on the health plan, and we see that all the time. But we're going to have an outside third party do that for us. As most of you know that have been on this before, we have every other month we try to have an outside party do the webinar, and it's going to be a property and casualty agent that specializes in work comp. May I have a copy of the webinar? Paula, thanks for asking that question. As always, we're recording the webinar. Once we finish the recording, we will be uploading it to our YouTube site, and you'll be getting an email saying that it's uploaded to the YouTube site, and I'll also send you a copy of this PowerPoint. Any other questions? I don't see anyone typing. Yep, someone's typing. Okay, Kevin has no questions. All right, Kevin, good. Okay, well, in that case, we'll say thanks for joining us today. As always, we really appreciate your attendance, and we appreciate providing these employer education webinars every month. We'll end the webinar on that, and I'll stop the recording, and we'll go